Welcome back, ladies and gentlemen. Now let's continue with the illustration. And the illustration is all about the sales ledger control account. And now we are being told that enter the following transactions in a sales ledger control account and other respective books of ABC PLC. And then NB, rather note that all transactions are in US dollars. So all the transactions are in US dollars. So January 2022, we're being told that, rather 1st January 2022, we're being told that ABC PLC was having cash in hand of 20,000, and then bank balance was $75,400. So these are opening entries of the bank balances. So this will only capture in cash and bank accounts, or if you're supposed to put this in the cash book, we'll also capture this in the cash book, but the balances we need to put them in cash and bank account ledgers. So our first entry here will go to our ledger balances, rather our ledger account individual accounts. So here for let's here do away with we are not doing away, but we are just trying to hide the sales ledger control account. So first we need to make entries in individual accounts. So we'll first hide the sales ledger control account, then we'll come after making the entries in individual accounts is when we'll come make the entries in sales ledger control account. So first we are being told that we have opening balance of cash in hand as 20,000 and bank balance as 75,400. So here we'll come to bank account. So we'll say here the date was 1st. So here we are assuming we are in February, then January 2022. So the date is 1st of January 2022. So here we'll say balance brought forward. Balance brought forward. So the balance brought forward here for cash was 20,000. So let me just make them fairly visible. So the amount was 20,000 for cash, and then the bank balance was also 1st of January. Balance brought forward. We have 75,400. So the assumption here is that the balances are debit balances. The balances, that's where we are debiting the cash and accounts. And then when you go to 1st of February, again you're being told that the debit balance is for customer A, B, C, and D with the 18,000, 25,000, 32,000, and 19,000 respectively. Opening stock was valued at 170,000. So we had debit balances of customer A as 18,000. So customer A, this was first. So balance brought forward was 18,000. Then customer B also we had balance brought forward was 100,000. Then customer C was 32,000 balance brought forward. Here we have customer C balance brought forward 32,000, and then we also have customer D balance brought forward of 19,000. So we have balance brought forward is 19,000. Then on the same January 1st, we had opening stock valued at 170,000. So opening stock was valued at 170,000. So here let's create an account for stock, inventory stock. So let me just put it here. So here we'll call this one stock account. So the balance brought forward here was 170,000. And then now, since we are writing the balances brought forward for the individual debtors balances, we also need to do the same on the sales ledger. So we are assuming that the business was operating. So we had these balances for these customers, maybe in let's say in December, because we're in January. But now come January 2022, we still have balances that are supposed to be paid. So we are having balances brought forward for this individual balances. So we have customer A, customer B, customer C, and customer D. So the date here is Jan, Jan 1st, January 1st, 2022. We have these customers. Just try to center them. So here we'll write balance word all these customers. Invoice number will not applicable. These are just balances brought forward. Then the net amount, let's assume let's talk of gross amount, because we cannot tell the net invoices, the net amount of the previous balances that we are now bringing forward. So we'll just talk of net the gross amount. So we have here at 18,000. Customer A 18,000. So let me just reduce the zeros, the decimal places. So customer A balance brought forward was 18,000, and then customer B we had 25,000. So this is 25,000. In customer C we had customer C is 25,000. Customer C is 32,000. This should be 32,000. And then customer D should be 19,000. Let's just confirm customer D is 19,000. So these are the opening balances within our sales ledger. So let's continue with the second transaction. So we are being told on the 2nd of January 2022, he sold goods on credit to A at 35,000. So here we are seeing 2nd of January, right here. Let's just write here 2nd. So this is 2nd January. Let me copy this one and special paste and format. The format. That is 2nd of January. Sold goods on credit to A 35,000 and B 15,000. So first we had A. Also here we are saying sales. It is credit sales. So the invoice number, let's call it invoice number 1. So the net amount, we are not so sure of the net amount. So let's use gross amount. So let's say, so let's just use gross amount 35,000. And then we also B had 15,000. So we had A, B, C, and D. So this one is A, B, C, was D. So A was 15,000. So these are still credit sales. So one can write invoice 2. And now we are saying BV is sold to be 15,000. Then we sold to C 21,000. Then we sold to D 16,000. Okay. So we are supposed also to make entry on the individual account balances with the credit sales. So what we've done here, we've made entries on sales ledger. So we need to do the same on individual debtors account. So we'll come here and see here we are making sales to A. So this was on second. So this one is, let's call them sales, or we can call them so these are credit sales. So instead of writing credit sales, just write them sales, because the control account for creditors is just meant for credit sales. So we'll write sales for now. For A was 35,000. 35 is 35,000, and then B was 15,000. So here is a second, call it sales. So C is 5,000. No, C is 21,000. C is 21,000. Then D is 16,000. So we made entry for the second transaction, 2nd January, both sales ledger, individual accounts. So on 4th January, received a check worth 11,000 from A and 17,000 from D. Received a check worth 11,000 and 17,000 from D. So here I need to make these entries on both sales ledger and individual accounts. Received a check 11,000 from A and 17,000 from D. So here we'll come here to here ledger account, rather to the individual accounts. So first we have to do the double entry for the cash received. So here you are saying on 4th you received cash worth 11,000 from customer A. So here we'll just say A, just write A account. Let me try to shorten it. So A account, we received 11,000. Applying the double entry concept, for every debit entry there must be a credit entry. So we received 11,000 from customer A. We also need to reduce the balances of customer A. So here we are writing 4th. We received cash. Received check, not cash. So this should be bank. So this again should be applied on the bank side, not cash. Here will come here and write 4th. So this one is 4th. So this one is bank. But actually bank will write here A account. So here we have 11,000. 11,000 from A and 17,000 from D. So here also on the same 4th we had B account for 17,000. So D has 17,000 and A we had 11,000. So on the account of A here we need to write bank, so this is 11,000. Then on the account of B also, so here we'll write 4th, and then again we'll write bank 17,000. Now it was an account of D, not B, D, not B. So we go to D. So here we write 4th of January, then we write bank, then here we write 17,000. Okay, so the same amount that we've received from our individual balances, we also need to record the same in the sales ledger. So we come here, but now they have not, the amount that we've received from our debtors not specified that it was for which invoice or rather for which specific invoices. So let's assume they are paying for the previous balances. We'll say here that A paid 11,000, was paid on date 4th, and then this was paid through bank, and then also D paid also paid 17,000 through bank. So here we'll write 17,000, then it was paid on 4th, and then is bank. So here we are having an assumption that the amount being paid is for the previous balances, because the illustration is just telling us that the amount being paid by A and D is paying for which specific invoices. Not telling us whether we are paying for these current invoices for the current period or for the previous balances. So when that information is specific, so we assume that they are paying for the previous balances. So let's get into the fifth, rather the third transaction. And then we have been told again that received a check from B worth 4,000 and from C worth 6,000. So B and C received 4,000 and C 6,000. So on 5th, we received a check from B and C. So let's start with the individual account balances. So here we'll go to B. This was 5th. I received a check, so it's being paid. It's paying through bank. So again, we received a check from B worth 4,000. So here we write 4,000, and then it was B and was B and C. So C gave us 6,000 by check. So we'll go to C account. We'll write 5th. Then we'll write bank. And then here we'll write 6,000. So we received 6,000 from C. Okay. And then the same amount we need to enter into our sales ledger. So on 5th and 5th we received 4,000 from B, 6,000 from C. just 4,000 from B and 6,000 from C. So in our sales ledger here, we'll write here B we received 4,000. This was on 5th. This was on 5th. This was via bank, and we also received 6,000 from B, rather from C, and this was also through bank. Okay, and then on 7th, sold goods to A on credit worth 15,000 and to C in cash worth 4,000. So sold goods to A on credit worth 15,000. So we come here right in our sales ledger. This was on 7th. So here we'll write 7th, and this I'll paste special and format. So here is sold goods to A. Also credit sales. So color this one invoice 5. Invoice 5. Then here we'll write gross amount was 15,000. And the same date you also sold goods to C worth 4,000. You sold goods to C worth 4,000. This is credit sales. So this one will write invoice 6. We sold them worth 4,000. 4,000. This was cash sales, not credit sales. So here we say he paid amount 4,000 because this was cash sales. So he sold on cash. So he paid. This was 7th. And this was cash. Okay. If you check on this row, there is no balance for this cash sale because it was a cash sale and it was paid. So again, after making this entry for the sales on 7th, we need also to make individual account entries. So here we are saying we received it was supposed to be 170,000. So we have also made the entries for goods. So let's just go back here. Debit balances, all goods, and this was second 35,000. So now stock account here, we ought to have made sales. So the sales started with the customer A, 5,000. So here we'll come here and write was second. So this was A account. A account. And then A account we sold 35,000. 5,000. And then we also had B account in terms of sales. The same second we had B, and the B account. We had C account. We had D account. So B we had B we had 15,000. This is 15,000. Then C we had 21,000. D we had 16,000. Let me add some rows. Insert. So these are sales on second. So I'm making these entries from stock account because we must show that we made sales. The amount, or rather the stock items that we sold must have come out from our stock. So we need to credit a stock account and then also show that we also made sales in our individual account. So you can see the sales that we made on second was for A, B, C, and C. So A was 35,000 shillings, rather $35,000. So $35,000 was a debit entry, and we must have a credit entry of the same. So for every debit entry, there must be a credit entry. So $35,000, we must also make a credit entry of $35,000 on the stock account. This applies to the all sales that was made on second for B, C, and D as well. So you come to account for C. At the account for B, we had sale on second for $15,000. So we also must have a corresponding entry for $15,000 on stock account. The same applies to C. And C, we had $21,000 dollars sale. So here in stock account, we must credit $21,000. And then this applies to D, where we had a sale of $16,000 on second, so we must credit the stock account with 60,000. So let's move. Let's also check on where we made sale. We also made sale on 7th, sold goods to A on credit 15,000. So here again we must show that on 7th we had 15,000. And then we received goods worth 4,000. So we'll go here to account. So in our cash account here, we'll say here was the 7th. So here we'll say sales. Here we'll it was 4,000. So if supposing we are also to make entry in cash book, so we'll make these entries that we made on bank account and cash account. We'll also make them in the cash book to reflect that we receive a cash or we received a check. So let's go to the last entry here, or the last transaction. So sold goods to D in credit worth 16,000. So goods would sold to D. Now this was on 12th. So we'll go to the account. So here we'll write 12th. So here we are writing sales. The sale amount was worth 16,000. And then we must also make this entry on the sales ledger. This was on 12th. Sale was Then to due on credit, was credit sale. Let's call it at invoice 7, and the amount was 16,000. So credit sale. So here in our ledger, sales ledger, we are having a pending balance of 174,000 shillings. It means that the total amount that we've received, let me just try to put the total here. The total amount that we've received is 42,000. And the opening balance was these figures here. These were the opening balances, 94,000. And then we also had credit sales and cash sales worth 122,000. The total amount of sales that we've made from the previous period and this period, rather from the previous period balances and this period is 216,000. So the assumption here that for the opening balances, so these are the previous period sales. So from the previous period sales and the current period sales, we've received cash. We've received amount worth 42,000. So our closing balance here is 170,000. So we need to compare this with what we'll have in sales ledger control account, whether it will be 174,000 or less. So we are saying that sales ledger control account is to show the arithmetic accuracy of the sales ledger. So let's go and make entry in our sales ledger control account. So before we do entries into our sales ledger control account, let's balance our account. So when you are closing off the books, there's something called balancing of accounts. So when the credit balance is more than the debit balance, there must be a balance carried down on the debit side, and vice versa when the debit balance is more than the credit balance. So here we have balance carried down. And the balance carried down will be 53,000 minus 11,000. So let me just say is equal to 53,000 minus 11,000. So balance carried down for creditor, or rather the customer A is 42,000. So this is the amount that if you add the individual amount of these debtors, we need to get 174,000, which we have in our sales ledger. Let me balance off again account B or B account. So this one I'll call it balance carried down. So let's assume that we are on 31st of January. So I'll write this one 30th. Then here balance carried down. So again, this will be 40,000 minus 4,000. So here we'll have 36,000. So it should be 30. And then go to cash balances. We have 30th balance carried down, and you have 24,000. So here the the debit balance is more than the credit balance. So here we are having a debit balance of 24,000. So it means that we are having a positive balance in our cash account. And then the same will apply to our bank account. We are having a debit balance, so our balance carried down is a positive balance of 103,400. So this one is also a positive balance. So bank and cash is an asset, and assets should be having debit balances. So here we have positive balances for both cash and bank. Then on discount allowed and sales return, we didn't have any entry. So we'll have 00 balances. And then in accounts, we have on the 30th January, we have balance carried down of 53,000 minus 6,000. So this is total 53,000 minus 6,000. So here we have 47,000. And then on the account, we have balance carried down as 1,000, 17,000. So the balance carried down is 34,000. And then on the stock account, I will be having on the date 30th January, balance carried down will be 170,000 and 70,000 minus 102,000. So these are our balances down. We need to make first ledger control account. We need to make entries. So first, what we'll do here, we'll start with the balance carried down. So balance brought forward, not carried down. Balance brought forward. Balance is brought down. Let me just write here. Let me avoid the issue of the dates. The amount here will be for bank and cash, because we are doing sales ledger control account, and the amount here should be meant for credit sales. So the balances brought forward here will just for sales account, not cash or no bank or not. What we put here is just the balances from debtors account. We'll add all the balances of our debtors brought forward, then we write in our sales ledger control account. So the first balance here is for account A, which is 18,000. Then we'll add to balance brought forward for B, which is 25,000. Then we'll go to balance brought forward for C, which is 32,000, and for D, which is 19,000. So here we'll add again 32,000, and then we'll also add 19,000. So these are balances brought forward from the previous period. And then now we'll also add the credit sales. We'll add all the sales for A, B, C, and D. And the credit sales here we have for A we have 35,000. Then for B we have 15,000. 15,000 is here, 35,000 is here, and then for C we have 21,000, and then we have for D we have 16,000 twice. For D we have 16,000, again plus 16,000. Okay. But we need to confirm if whatever we are doing here is correct. So we need to confirm if cells for D is correct. So let's go to our illustration. So it's good to get 16,000, and then on second also 16,000. So it's good to a 15,000. So it's good to a 50,000. Is it A or B? So good to a what 50,000 and 4,000 in cash. So good sold to A was 50,000. So good was sold to A twice on 15th, on 2nd, and on 15th. On 2nd and on what? On 2nd and on 7th. So here also we have 7. So we need to write sales. Here is 15,000. Okay. So the balance is carried down here should be 8,000 minus 11,000. 8. So balance carried down should be 57,000. So when you go to credit sales, we also had for A as well, we had 15,035 plus 15, again plus another 15. Okay. So these are the credit sales. Okay. These are our credit sales. So again, we need to put here a bank stroke cash, what was paid by these guys by bank or by cash. So we need to write here bank stroke cash. So what was paid via bank? We had from A was 11,000. And then we also had B. B paid 4,000. Then we need to check whether C and D also paid the bank. So C paid 6,000. We also had D paying 17,000. So they paid 38,000 in total. So here we need to check the arithmetical accuracy of the individual account balances and the sales ledger. So here we have 30th balance carried down. will be to 12,000, 12,000 minus 38, 8,000. And these are what we have as the closing balances of sales ledger control account. So we have these as our closing balances. So here, if we check, you see when the closing balance is here 1757 for A, then we have 36 for B, we have 47 for C, and then 34 for D. So if you add all these balances, you're supposed to get 174,000. So when we check on our sales ledger control account, we need to get 174,000. So when we check sales ledger control account, our balances are carried down is 174,000. So our sales control account, checking the arithmetical accuracy of the sales ledger is correct. So ladies and gentlemen, I hope it was a good exercise. We learned and we compared the sales ledger control account and sales ledger, and all was time. So let's stop at that, and we'll meet again on the next video where we'll talk about purchases ledger, rather purchases ledger, yes, and then we'll move again to the general ledger. So thanks a lot for watching, and let's meet again in the next video. And for those who have not subscribed, please take a second or two to subscribe. And for those who have subscribed, I salute you for your support, and please share the information with your colleagues so that we can learn together. So let's meet again the next